So I have a plan. I want to build a property portfolio that pays me passive income for the rest of my life, builds up an asset base, and that can pay for my monthly expenses so I don't have to worry about bills. But as someone who's worked in the property industry for over a decade, if you've looked at the UK property market lately, you'll know that the old way of doing things, which is saving for years, scraping together a deposit, and becoming a landlord, is starting to feel like a losing game. Back in the mid-90s, the average house cost about 4 times your annual earnings, but today as we sit here in 2026, even though affordability has improved a bit for the fourth year, a typical property still costs about 8 times your gross earnings, and if you're in London, it's even crazier at 11 times, according to the Office for National Statistics. For most of us, that starter home isn't a ladder, it's an invisible barrier. Now, think of taking that process and repeating it over and over again to build a portfolio. But what if I told you there's a way to become a landlord with just £100, no mortgage, no boiler repairs, and absolutely zero no-fault evictions to worry about? Today I'll be showing you how to build a digital property portfolio that invests in real properties and that pays you every month while you sleep. So, let's get started. So here's the problem. Being a landlord in the UK and around the world really isn't what it used to be. The government has fundamentally changed the rules of the game. We're talking about the Renters' Rights Act 2026. As of May 1st, the Section 21 no-fault evictions are gone and tenants now have rolling periodic tenancies with no end date. Then tax hikes. Rental income tax increased by 2% across all bands starting this April, so if you earn over £50,000 from rental income, you now have to send HMRC quarterly digital updates. On top of that, it's becoming a full-time admin job. You have to fix serious hazards faster under Awab's law, manage pet requests, and deal with rental bidding bans. If your tenant stops paying, the threshold for eviction just increased from 2 to 3 months arrears. So for a lot of people, the passive income part from a physical rental has become anything but passive, and people I know who own rental properties have told me just how draining it is to deal with tenants, contractors, repairs, and rental disputes all the time. In fact, a few years ago, I worked with a developer myself to build and buy a property which I owned and lived in for a few years. But when it came time to move, I chose not to rent it out, but rather to sell it and invest that money in a different way instead. So, let's talk about my favorite tool for property investing, which is the Real Estate Investment Trust, or REIT. These are companies listed on the stock exchange that own massive portfolios of real-world properties, and everyday people like you and I can go onto an investing platform and buy shares in those companies, and by doing that, we're buying a tiny part of all of those properties that they invest in, but more importantly, we're also buying a tiny part of all the rental income that they produce as well. The only difference is that we don't have to build up deposits for them, we don't have to enter into mortgage agreements, and most importantly, we don't have to do any of the work for them or deal with leases, repairs, agents, rental disputes, or situations where the tenant stops paying and doesn't want to move out, and we have to deal with the courts and solicitors and take all of that financial risk along the way, not to mention unexpected situations where there could be roof leaks, rising damp, burst pipes, and insurance claims. I've actually worked as a portfolio manager for a stock exchange listed property fund, so I know just how much all of this work can be. But with the REIT, you leave all of that work to someone else and just bring in the dividends. Now, by law, all REITs have to pay out at least 90% of its profits to you as dividends. So think of it like owning a piece of a shopping mall or a hospital or a massive warehouse, but all for the price of a nice meal. And should you need the money one day, you can sell it in minutes instead of months, so your investment is much more liquid. Now, how does this work and how can we actually start? Let's say you've got £100 to invest, and I'll take you through the steps to do that, and more importantly, what are some of the real-world options for companies that we can invest in to build your digital property portfolio. Now, I use Trading212 as my platform, and that allows me to have a free account with no monthly fees and gives me access to buy, sell, and invest in all of the companies we're going to be talking about, and it's also where I receive my dividends. Now, before we get to those companies, our channel has partnered with Simply Wall Street, which acts as the portfolio command center for your investments. I've been using it for 3 years, even before they came on board, and it links directly to my Trading 2 and 2 portfolio in real time, and it allows me to see all of the data and valuations of all the companies that I invest in, as well as those I'm still researching. And once I've invested, this dividend section tracks how much each of my companies is paying me for the year, but it also shows me every single month and every dividend, either actual or estimated, and when to expect it, so I can see what income I can expect and when. Now, for viewers of our channel, Simply Wall Street is offering a free account for life, but if you want to look at using any of the paid plans to link your brokerage or set up multiple portfolios and watch lists, or to do further research on companies, they are offering 30% off all plans and an extended 14-day free trial to try out these plans for free, which can be stopped at any time. So if you want to get your free account with Simply Wall Street or to get 30% off premium plans, click on the link below and find out how to best manage your portfolio with Simply Wall Street. Now, this is an affiliate link, so you will get the savings and I will get something as well. By the way, I'll also include a link to my own portfolio below so you can see exactly what I'm investing in and what income it brings me. So you've got your £100 ready and you're using a platform like Trading 2 and 2, so you can now start investing in your property portfolio. Let's talk about some options. Now, just remember, I'm not a financial advisor and this is not financial advice or a recommendation. I'm just sharing some information so you can do your own research further. Remember that investment values can go up as well as down, and when investing, your money is at risk. When it comes to property stocks, there are many options that span across different regions, sectors, and industries. And when building your portfolio, you can choose to specialize or invest in multiple companies to diversify like I do. So if you're looking local, some of the more popular companies are London Metric Property. This is one of the most diversified REITs in the UK. They own logistic hubs, warehouses, theme parks, and private hospitals, and currently they are offering a dividend yield of around 6.2%, like you can see on Simply Wall Street. Then Segro. If you believe in the AI revolution, Segro is the option. They manage big box warehouses and now invest heavily in data centers to handle the AI demand. Their yield is around 4.2%, but the growth potential is massive. Primary Health Properties. They own over 500 healthcare properties around the UK. It's a defensive stock because people always need GPs and pharmacies, and it pays dividends of 7.3%. Then there are options outside the UK. If you want that monthly rental, there are international REITs you can buy as well. You have Realty Income. They own over 15,000 properties globally and have increased their dividend every year for 30 years. Their dividend yield is 5% a year and they pay your dividends to you every month. Then EPR Properties. These guys focus on experiences, so think movie theaters and ski resorts. They currently offer a yield of over 6.3%, and again, this stock pays you dividends monthly. Another one is Simon Property Group. They are the largest owner of premier shopping malls and destination hubs. While many think the death of high street retail, Simon has proven the resilience of destination centers. Currently, their dividend yield is around 4.7%. So you can research these companies or many others on Simply Wall Street. I personally hold all of these I mentioned except Segro and Primary Health Properties. And the best part of building your portfolio like this is if you hold these stocks in a stocks and shares ISA, every penny of those dividends is 100% tax-free. You could build a portfolio that pays you more than a physical rental ever could, with zero tax and zero phone calls about a broken boiler at 2 a.m. So, you can use an investing platform, find which REITs or even a property ETF you want to invest in, and over the weeks, months, and years, continue to invest during the ups and downs and pound cost average, which means to buy regularly to even out your buying price, and you can build up your digital property portfolio and of course your passive income. Now, over the long term, if we pick solid companies with good fundamentals, we should see growth in our passive income as companies increase their dividends, and also the share price of the stock should grow in line with their properties' valuations and rental income increases. So year after year, over the long term, we should see an increase in our stock price and our asset base, and an increase in our passive income, just like investing in hundreds of investment properties at once. but where we can start for less than £100. So while everyone else is fighting over mortgages and deposits, you're building a diversified liquid portfolio that you can sell in seconds if you need the cash. Building wealth isn't about following the old rules, it's about using the tools available to us today. Property is still the king of wealth, but in 2026, the digital crown is a lot easier to wear. But that is it for today's video. If you want me to do a list of the best property companies to invest in, let me know in the comments. And to start with Simply Wall Street for free or use the 30% discount, just click on the link below. If you found this helpful, please remember to like and subscribe. I'm documenting my entire journey to a 100k UK portfolio, and I'd love to have you along. But I will see you guys next time, as always, on Casual Cash. Cheers.